us have seen that in our own lives over the course of the last couple years. So I encourage you to share that with the young people around you. If it's your children or your grandchildren or your nieces or your nephews, encourage them to look into buying their first home, because there's nothing easier than coming home every month and making that payment. And over the course of a few years, you have built up equity. And we talked about it last week, and I got a little ribbing from some friends of mine who I referenced equity being either appreciation or principal reduction, and appreciation being the pretty one and principal reduction being the ugly one, but them both being equity. And this is an example where, regardless of the route, it worked out for this family. So I encourage everybody just to share that story with people and let them know that buying that first home, even if it's not the home you want, we all have our wish list. I don't want to buy a home. I hear this all the time. I don't want to buy a home until I can get this. And Dom and I talked about this, and this is, I know I shared this last week too, but this is an interesting dilemma that we're in. We have people who say, I don't want to do until, and they have this long wish list, 5 bedrooms and a pool, and great. And I want you to have that. But maybe the 2-bedroom townhouse is the starting point. And that's the jumping off point. And you live there for a few years and build that equity that'll help you take that next step. Or, God forbid, you run into a situation where you need that equity to pay medical bills or to bridge a gap in other areas in your life. So home ownership, real estate still makes a lot of sense for a lot of people. I'll always be an advocate of it in all markets. So yes, refinancing even in an increasing interest rate environment can make sense to you. Don't just look at the headlines. Dig into your monthly inflow and monthly outflow and analyze your particular situation. So I didn't mean for that to go as long as it did. I thought I was just going to clean up that previous segment, but I just wanted to share with you that one story, because we oftentimes say, okay, I missed the boat, and we kick ourselves. But the reality is, I don't know who said, I'm sure it's an ancient Chinese proverb, or Buddha or somebody said, if you want shade, the best time to have planted a tree was 100 years ago. Well, the second best time is right now. So yeah, you missed that all-time low interest rate, but you still have opportunity in front of you. And hey, maybe that's why I told that story. Maybe this all winds back to that opening segment where we talk about capitalizing on opportunity in the market. So long answer to a question. Yes, it still makes sense if it makes sense to you. So if you have questions, give us a call. 561-291-8569 is the Anytime hotline, or visit www.mr.mortgage. Again, 561-291-8569. So we're going to take a short break here, and when we get back, I'm going to cover those other topics that we mentioned. We touched briefly on the DSCR loan. We're going to talk a little bit about reverse mortgages. I've got a reverse mortgage client that I'm going to see today after the show, so that's top of mind for me. So we will be right back after these messages. Thanks. Quick question. Do you have any idea what your home is actually worth in this market? I mean, things have been appreciating so quickly. I know a lot of people turn to the internet and those online estimates, but I wanted to share with you a powerful tool that we use every day in our lending practice. We have a valuation tool that generates a robust 10 to 15 page detailed property valuation report. It's not quite an appraisal, but it's way more accurate and detailed than one of those online estimates. And I'd like to make that available to you, one of our valued listeners. Just visit the website freevaluereport.org. That's freevaluereport.org. There you'll be prompted to answer a few questions about your property. That's it. We'll do the rest. We're happy to send you the report. Just visit freevaluereport.org. And thank you for being a listener of the Mr. Mortgage Show. Are you a rock star real estate agent? I mean, truly one of the best? If you are, let's talk. This is Mark Eitel, host of the Mr. Mortgage Show, and we are currently expanding our network of rock star referral partners. If you think you have what it takes, we'd love to connect. Just visit Mr.Mortgage. That's www.mr.mortgage. Mr.Mortgage. There's no .com. Just type in Mr.Mortgage, hit the contact us button, and let's talk. It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. Again, my name is Mark Eitel, host of the Mr. Mortgage Show, and the Anytime Hotline phone number is 561-291-8569. That's 561-291-8569. Or you can hit the Contact Us link at www.mr.mortgage. No .com, just mr.mortgage. So I wanted to hit back on one of the topics in the opening segment where we talked about the alternative forms of income verification for self-employed borrowers. So as we mentioned, it's tax time and we're all looking at our tax returns, or we're soon to be looking at them. And we do our best to reduce our financial obligations to the old IRS in the form of taxes. So in doing that, we often end up with a income amount that may not fully represent our buying power. And when a mortgage professional is jumping in and evaluating your tax returns, you may say, hey, wait a minute, I make a lot more than that. And we are able to add back, as I mentioned, some write-offs to more truly represent your income. But there's a very interesting loan program that's available where we're able to use the income that's flowing through your bank statements to verify your qualifying income. Now, I caution you that it's not a dollar for dollar qualifying. So if you have $20,000 a month flowing through your business bank account or your personal bank account, depending on your profession, that doesn't necessarily mean we're going to use $20,000 a month for your qualifying income. But what it does mean is, well, and think about that for a minute. If you're a general contractor or a handyman or whatever the case may be, and you're providing a service that requires you to buy materials, or you're a manufacturer even, and you're buying raw goods to produce a product, certainly, logic dictates that $20,000 isn't all kept as income because you've got material expenses against that. You've got obligations against that income. So there's different calculations for different professions. If you're a consultant and you're working from your home and you're getting paid for your advice, then the majority of that $20,000 might truly be income. But we're going to lean on your CPA or your accountant to give us some guidance on, what a reasonable ratio is for your profession. But that opens up a wide variety of purchasing power for most self-employed people. So I've got a client right now, super, super nice guy. He owns 5 businesses, and he's one of the more complex tax filings that we've seen. And I've got on staff some people that are they're specialists in diagnosing tax returns for self-employed borrowers. So we've got an amazing team when it comes to this segment of the market. The complicated nature of the 5 businesses and how everything flows through one business to another, and this one shows a loss and this one has a small gain and another loss here. I totally understand the purpose of that strategy because he's minimizing his, all within the law, by the way, but he's minimizing his tax exposure. However, his actual qualifying purchase amount, or in this case, a refinance, is ridiculously low by comparison of what his actual earning power is, if you will. So we utilized a bank statement loan to do a cash out refinance for him. So yes, you can do a cash out refinance. You can do a rate and term refinance. So you can do a purchase. So a bank statement loan or another alternative income verification loan product is a great tool for the self-employed borrower. Sometimes we can get away with as little as 12 months bank statements. Some of them require a 24-month chain of bank statements. Sometimes we can use one tax return instead of 2 years tax returns. There's a wide variety of circumstances where having a lender on your team, be it my team, me, or another lender, but have somebody on your team that utilizes all these products and has knowledge in all of these areas, because in our region, if you will, in South Florida, we have a tremendous number of self-employed people. And it's just a shame when, you might be an amazing banking customer, and I'm not going to mention any of the big box banks, but you might have an amazing relationship with your bank, and you're self-employed, and you've been a loyal customer, and you've got great credit, but you're a self-employed person who shows very little income on their tax returns. And you go to make a purchase and walk into your bank and think that you're in great shape, and the bank's, I'm sorry, we can't do this. And a lot of banking institutions don't have, and I may be wrong, definitely ask them, but most banking institutions don't offer these alternative products that are often classed as non-QM. So bank statement loans for self-employed borrowers, certainly explore the option. Don't let your tax returns count you out of this market. And again, that speaks back to the topic of finding opportunity in this market. So even if a loan program that might be slightly out of the box carries a little higher interest rate, look at the overall picture. Does that monthly payment still make sense? Does gaining the appreciation in the property still make sense? Or as I mentioned last week, let's say property never appreciates again. Does just owning that home and paying down that principal over time make sense? If the answer to those are yes, then you certainly want to explore all your options when considering making a purchase. So just because the bank says 2 years tax returns are required, and I'm not knocking the bank, right? Everybody's got a different set of rules, and all institutions have different products. So I'm not knocking anybody, but don't let that very first no be the only no you hear, because explore your options. Ask, do you have a suite of non-QM products? Do you offer bank statement loans? Another big market that we serve here in our region is foreign nationals. You're a foreign national, or you're here on an H-1 work visa, and you're going through the citizenship process the right way. You didn't climb a fence. You're here. You're documented. You're going through the process of becoming a citizen. There's visa classes. There's the foreign national class that offers the opportunity to buy real estate. So I think that with the tremendous opportunity that's available in the market, and by opportunity, I mean two things, right? Interest rates are low. So relative to the amount of money we're borrowing, payments are low. But also the foreseeable appreciation is another opportunity. So finding that opportunity and then exploring all the options that allow you to capitalize on it, I think, are super important. And for self-employed borrowers, that's the suite of bank statement products that are available. For foreign nationals, it's the non-QM products that are available. And to jump all the way back to the investors, self-employed investors can use a DSCR loan to buy, cash flowing investment properties. And we see a ton of that, by the way. There's the construction industry in particular, the self-employed construction company owner or remodeler or handyman, that's the perfect guy to go out there and use the DSCR loan to buy investment property, because if it needs renovation, guess who's doing that renovation? And they're not paying retail. They're doing it at their cost, and they're maximizing their return on that effort and investment. So non-QM products, that's a technical term, but basically it's just alternative products, mortgage products that are available to you. We covered a couple of those today. We covered the DSCR loan, which is primarily designed for investment properties, including Airbnb properties. And we covered the bank statement loan for self-employed borrowers. So we're happy to answer any questions on both of those those loan products. We have a full suite of non-QM products available. So if you have questions, give us a call at 561-291-8569. That's 561-291-8569. I might have thrown an extra digit in there. Let me do that again. 561-291-8569 is the anytime